In today's video, I am going to be breaking down what the MACD is, how you can use it in your investment journey, how it could technically make you millions, but at the same time, how it's not the be-all and end-all in investing. I've mentioned the MACD a few times in my videos, and there's some people online, as well as on news sites, that will just say it's like the god of investing. It's not, and I'm going to explain to you why. Right now, let's check it out. Okay, so first off, we're going to be looking at Netflix, and this is a very good example as to not really 100% put all of your investment strategy behind the MACD. First off, yesterday it was down 1.48%, and as of pre-market today, because their earnings were terrible, they are down 20%. I remember telling somebody not to invest in Netflix just the other day. So let's really check this out. What is wrong with this? So first off, they were declining for months before the recent earnings call. The reason for the decline was kind of a two-pronged approach, and that was because, of course, there was inflation that was really worrying the market for at least most tech stocks, as well as the issue with the fact that money is cheaper then, and it's not going to be as cheap in the future, and also the fact that this was the downturn because way over here, everyone was really getting Netflix because everyone was locked down for a while, and of course, even before that point, everyone was locked down throughout the entire world, and now at the reopening, there's going to be less people having time for Netflix, so they're going to be canceling. That was kind of the multiple reasons why this was already declining. Also, the fact that it sort of hit a double top, that doesn't help either. However, this is because now they're saying that their earnings could be drastically reduced in the future because of potential reopening and people not having enough money. However, if we look at the MACD, this is a MACD as of yesterday. And in theory, this looks like there could be some more downturn, but at the same time, it was getting near the bottom of the chart. There was a little bit of a closing in of the gap, and it looked like there was going to be maybe just a bit more of a downturn still coming, because of course, what you want to look for is the blue line crossing over the green line. And when that happens, in theory, the stock should go up, and that is exactly what we've seen here. Anytime the green line goes over top of the blue line, that is the market declining, or at least that stock declining. However, we have to remember that a stock will never have one single indicator as to why it will go up or down. There is usually multiple reasons, and the MACD is one of those reasons that can help us understand the stock or the market, but it's not everything. As we can see here, massive down volume, and that may continue just a bit more, or this could be a good buying opportunity. Who's to really say until about a month from now? Now we'll switch over to TD, and this is a totally different graph. We're seeing a stock that is increasing over the past 3 months. And the MACD is starting to get to the, or at least near the top of the charts, and what we also do see is that the MACD is starting to cross. This would tell me that this small little pullback that just happened is probably not going to be the end of that pullback. There is potentially a little bit more that is going to happen. And I'm going to be really breaking that down as to why. So number one, there was a pullback. MACD never crossed. Number two, volume that is in the red, which means that when it's like this, that means that there's more people selling than buying, which makes sense because, of course, the stock is down. However, we are not seeing massive growth of volume on down days, which means that there could be still some more selling coming off into the future. Notice how I'm not just looking at the MACD, even though that's about to cross, it looks like. Anytime that these lines get closer to 2, and anytime that they get close to crossing, I would personally be hesitant on investing in that stock. And we'll take it a step further. Let's look at SPY, which is the ETF that covers the whole entire market. We've seen some massive swings in the market itself. However, we are starting to see some increased selling volume multiple times during this period. It's also blown past any levels of support that it once had. Now on this chart, what we are seeing is something that is also very concerning. A gap increase between the green and blue line. This means that there could be a massive downturn coming to the market very soon, even farther than what we've seen in the past couple of months. This could be a sign that if you were to sell now and buy back in 2 or 3 weeks, you might do really well. But I wouldn't suggest doing that because you can never time the market perfectly. As we can see here, the blue and green line were pretty much trading sideways. During that time, what do we see? Well, if we look at that time period, we were basically trading sideways in a way. There was a little bit of a spike, but that's about it. Anytime you have a widening of the MACD lines, that means that there's going to be more downturn in most cases. What you are looking to really find at this point is waiting for the blue line to kind of trade sideways for at least a couple of days, because that usually signals that it's a buying opportunity. As we see here, that was a fantastic buying opportunity. You didn't get it at the bottom. That's, again, just chasing hopes, wishes, and dreams. But when you see it starting to level off, that's still not bad. You still would have had a fantastic return of roughly about 15 points, which isn't all that bad. So what I'm trying to say is the market is probably going to be going down very, very soon. Anyways, this is, of course, I almost said February. I said Friday. I should have said Friday. But either way, January 21st, 2022. I almost said 2021, but 2022. Anyways, this is how you can use the MACD to make some better decisions on the stock market. Again, nothing is always perfect. You can't just look at one thing and say, I need to buy that, because it's going to hurt you. You need to look at the whole entire picture. What are the company's earnings? What are the company's potential futures? What are the opportunities that this company could get into? But also, volume is huge. Also, negative or positive volume, and the MACD can really help put everything together. This is just a basic overview of the MACD. This is not going to be getting into the scientific, all the different stuff that you would learn at university. This is just the basics of the MACD and how you can use it in your ability to invest. Anyways, I hope that you've enjoyed. If you have, hit that like button, subscribe, and I'll see you guys again next time.